What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy.
Cool. What's up, man? How we doing?
I'm good, dude. It's just been Spaces nonstop. I was just on Spaces until a minute ago.
Hey, the grind. I know how it is.
No,
Okay.
it's good.
I
It's
know we got
good.
good spaces. We got an hour left in the day. Hopefully, we can close green and continue the Ripper streak. I know we got Bitcoin and
Yeah,
crypto moving higher, which is probably good for your last space.
yeah. No, that space did great actually. We had like 400, 500 people in there like the whole time. It was fantastic, and the discussion was actually extremely intellectual. We had a couple of very smart speakers that were on there that really gave some awesome opinions, and I'm sure not everybody agrees with them, but it's very helpful to have more information to take in when you're dealing with like cryptocurrency, which is still a developing topic by far, by all standards. What's up, Stocksman?
What's up, bro? How you doing? How's everyone doing today?
I'm good. I'm good. Kind of wish I placed more trades today, but I've just been really just grinding spaces.
Hey, man, I see you always, always holding it down spaces, but it's been a very clutch day today. BKKT, Mark, all some alerts for myself and my group, and yeah, I'll say something public just for everyone, but Facebook on this kind of dips, man. Wow, gobble gobble. I am a obese man. I'm eating every dip on Facebook and on PayPal. I'm enjoying myself right now. Having a good day.
How's Facebook doing now? Because people were wanting to short that on our space today.
Oh, earlier today, definitely. No, definitely today. Earlier in the morning, hell yeah, you could have shorted the hell out of this. But no, right now I think it's settled. It found its floor around 225, which is the support I had drawn out before. And from this point, I'm actually playing weekly longs 235s on it, and up about 8% right now.
I kind of like those right here.
I mean, you could take them right now too. I got them earlier today. Once I saw the big breakout candle, once it broke below 225, ripping up to 226 at around, I'm West Coast time. Please remember that 10 a.m. So probably like 1 p.m. East Coast time. When I saw that candle, right after that, I played the next dip on the next follow up 10-minute candle, and then got my entry there. And now I'm expect a really big bounce from this point. Honestly,
So you have 235s?
I have 235s. Yeah,
Weeklies?
weeklies.
Okay, I just put those on my watch list.
Yeah.
Uh, okay, awesome, man. I appreciate it. We're definitely going to dig into those. All right, I'm going to go ahead and put out the tweet just to let everyone know we are live. Didn't get that out until kind of the middle last time, so I want to make sure that that's up good and early. What's going on, Catherine?
Hello, hello. How are y'all?
Living the dream on that spaces grind already. Evan, how many hours did we do this morning? Did we do 2.5 more? I think we did 2.5. So I'm currently
Oh, my
at
bad. I
four.
thought I was on mute. 9:20 to 12 is what we did.
Yeah, so I'm currently at over 4 hours of spaces on the day. So we're moving. And I have this one, and then do I have 3 more after this? I don't know. I'm just getting into it. But how about you, Catherine? How's your day going?
It's not as space as heavy as yours.
I'm surprised. How?
You know, I don't know. You are the king of spaces, and no one can take away that throne. You've
Well,
solidified it.
we'll work it out. All right. So I just put out that tweet. If everybody could take a look, I will pin it up in the top of the space. Thank you, Evan, for sharing that. I just shared it from the Wolf account. That is pinned up in the space. I see Juicy's here as well. Let's get into some Power Hour chat. We're ready at 3:05. Ideas here. We're Monday. The market goes up during bullish Rippers spaces. So let's see where the market started. Yeah, I mean, we're already up. 3 p.m. Market was at 449.91. We're already at 450.28. Let's see if we can continue with this roll. If anybody has plays for the week, if you're in positions that you're going to swing into tomorrow, especially, we want to hear them. And we would love to hear option plays, common, whatever you've got going on. I want to know. With that being said, Sarge, do you want to kick us off?
Yeah, sure. Okay. Seems kind of quiet actually from the macro front, from the Fed front for right now, but there's a lot going on. On Semiconductor posted nice earnings this morning, real nice. I wasn't in time for that one, but I did try to sort of get back into Marvell Technology off of that. So I'm long the February 11th 72 calls Marvell, and I'm short three times as many $67 puts also expiring February 11th. It was about a 60-cent debit. Peloton, I'm just playing it on the upside just in case there's some kind of, just in case there's a takeover news later in the week. I'm long at 33.37 February 11th bull call spread for about $1. Amazon, I took off half my long at 32.20. I'm keeping the other half on. UPS, looks like the 219 pivot was tested. I'm going to reiterate my 265 target price. Lockheed Martin looks like it's starting to base a little, about $20 away from a 14 target price. I've not taken any off. I'm interested in Disney, not just interested. I'm long Disney, and I'm short some. Where am I? Where am I short the calls? Hang on.
Are you short Disney?
No, I'm long Disney. I'm
Okay,
short the.
good, good.
I'm
Just
short the
making
one.
sure.
I'm short the February 18th 150 calls. And I'm a little concerned for Wednesday because we have a couple of Fed speakers that day. The CPI, what's CPI? CPI Thursday or Wednesday? Hang on. CPI is
We go
Wednesday.
out on a
Hold
limb and say Thursday.
on. Yeah, out on a limb.
I'm pretty sure it's Thursday, but I don't want to give you full
Yeah,
certainty.
okay. So
I
CPI
think
is
you're right, but
Thursday.
I also didn't want to be wrong.
Yeah, the two Fed speakers, including Loretta Mester, who is probably the second most hawkish person at the Fed, they speak on Wednesday. So probably we could get a little bit of jittery markets going into the Disney earnings, which I'm expecting. If Chapek's going to do something special, he's going to do something special now. Okay, this is his chance to shine. He pretty much took over during a pandemic. It hasn't been easy for him. He's not as likable as Bob Iger, so he's got to shine here. So I'm hoping for Disney. My play in the week, which I'm in the process of trying to build a long position, but it hasn't been easy, is Uber because I'm a little late to the party. Uber coming into today was down 11% for the year. It's up, I think, about is it about a percent today? Let me see here. Uber is up about 2% today, 2.7%, up $1. They have what do they have? Their earnings on Wednesday, right? Earnings February 9th. Yeah, after the bell, they're looking for about a loss of 29 cents a share, probably adjusted. I think I forget the revenue number, but the big thing is the next day is their investor day. Okay, Uber has never had an investor day since they went public. It's the first one ever. We're going to get a lot on the regulatory backdrop. We're going to get a lot on the grocery market, probably $1 trillion addressable market there for them. Oppenheimer has reiterated their outperform on Uber and said the investor day could be a positive catalyst. So we're looking for something special on Uber, but it's been a little tough to buy in the dips if you didn't come in this week long. And this was a product of my weekend homework, so I am not long that stock, but I'm trying to be. I guess that's it for now.
When you say you're trying to be, does that mean that you're waiting for a specific level or a dip or something to enter on?
I'm trying to get a dip. I'm sure I won't. I'm sure it'll end up being a trade and not an investment because I'm not going to be able to build a large enough position by Wednesday. But if I can get a proper dip or a proper signal off for the 2 or 3 minute chart, I'll probably buy something. There was a chance today to buy it a little earlier, down around 37 and a half. That was the low today, but it stayed there probably for about 35 minutes. So there was a chance to get a decent price today, which I did not get. Most of the buying's been up around $38 today. So I'd like to get it under 38. That's the VWAP. If I could buy some today, maybe buy some tomorrow. We'll see. But that's the trade that's in my head rolling around for this week.
Perfect. Thank you, Sarge, for sharing. Okay, the Stocksman, I saw that you had unmuted beforehand. Did you have some more plays you wanted to throw out there?
Yeah, definitely. So I'm gonna agree with Sarge on two of his picks, Disney and Uber. Chart setups on technicals. If anyone doesn't know, I'm more of short. I'm an investor as well, but a lot of my focus is on short-term trading, options trading, stuff like that. So Uber looks really, really nice with a great area above that can, if earnings go well and investor day pulls up, could see a big rip back up to the 45 area, which would be $7 on this, which is almost more than a 20% gain. So I really like Uber. I really like Disney. And then plays just on this short kind of just for this week in a sense. I'm short CFVI. which is the Rumble SPAC. Just ripped today really heavily, 30% because of the news of sending Joe Rogan an offer. But I'm pretty sure Spotify is not going to lose out on their biggest star. So CFVI, I'm currently short. I think this has more downside, and if it comes back to, let's say, even $13, right? $3 on this play is again a 20% gain. So slowly shorting this down.
Are you shorting stock
plays,
or puts?
no, shorting. And then what else? There's one more. Long Tesla. I have Tesla contracts open as well. And I think Tesla will see a nice bounce this week, along with a lot of tech. This week, I think this morning has just been a sell-off that continued on for the momentum from Friday, and overall, I'm long. Reversal on Facebook. I'm adding Facebook shares, and I have calls for today as a day trade. I really like Facebook's price point at 225. Still overvalued if you look at fundamentals. You look at forward PE and stuff, but on a trade basis, I think it's very oversold, and I'm looking for a bounce with a lot of tech here. PayPal as well, playing those two. So PayPal, Facebook, Disney, Uber, and then I'm short a lot of these pops, like on for day trades. Fun probably tomorrow. Today, I'm not really too much momentum today. CFVI, and then I'm gonna assess the crypto markets as well and see it when is the appropriate time in the upcoming week to get some puts on Mara, Riot, BTBT, and some of all these crypto miners that are having really, really great days because of crypto coming back a bit here. So those are, it's a pretty expansive list of plays in different sectors. So hopefully you guys can take a look at some of those and see which one fits your trading style the best. Some investments, some trades, some short term, some long term.
Perfect. Appreciate you laying that out. And what I'll tell for people in the audience is, as you're listening, somebody puts out a play that kind of appeals to you or the style that they are talking about, I'd recommend either clicking in, checking out their bio, checking out some of their posts. They probably made posts about it. Maybe they put it up charts and stuff like that. You can also DM them if you have follow-up questions, right? They put out a play, you're interested. I recommend if you're going to DM them, you should probably follow them. More likely to answer your DM. But a great way to just continue to network, get in touch with people. If you're going to take one of these plays, maybe let them know, hey, I'm taking that. But I would also recommend do research before taking anything. Everything that's on here is not financial advice. It is simply for ideation purposes. So if somebody throws out, hey, I'm long Uber, for example, go in and do your research. Look at the fundamentals if that's what you're trying to do a long-term play. Look at the technicals, if you're trying to maybe just do short-term, a crossover of both. Understand the volume or the flow around it and just continue to eye different areas. Okay, Catherine, what's going on by you? What do you have your eye on?
Hello. So as the resident journalist, I cannot give any plays, but I will run you guys through what I'm looking at, and spoiler alert, lots of earnings. I have right in front of me right now a KeyBank preview on Disney, which I'm going to bring up because Sarge was talking about it. The analyst wrote, and I'm directly quoting them, Disney should be one of the fastest growing companies we cover over the next several years, supporting a higher valuation, and with sentiment poor, we'd be buyers. Essentially, they're going to look, of course, because who isn't, for streaming numbers and comparing that with Netflix. But they also adjusted their parks estimates higher after Comcast's stronger than anticipated results. So those are probably the top three things that I'll be looking for in Disney's quarter. Sentiment, the streaming numbers, and then parks. And then I'm looking at just overall earnings season. I've got a FactSet report of earnings by the numbers. Companies have so far shown that there's solid demand for the most part, but there's obviously supply chain issues, staffing issues, and just like inflation. That's really what's plaguing these earnings reports. 56% of companies have reported earnings, and just 76% of companies that did report earnings surpass the consensus EPS average, which is down from the 84% four-quarter average. So there you go.
So with all that in mind, what should retail investors keep their eye on this week?
I think definitely the CPI data, and as Sarge pointed out, the Fed speakers, because right now we're setting up for a week that's going to be very it's going to be quieter so far. And right now, it's looking quieter. So one big quote from a Fed head could get you market action. Same thing with CPI data. I mean, really depends on what we hear. Other than that, it's going to be earnings, kind of name of the game again. With Amazon earnings, we saw just how quickly sentiment changed. Same with Facebook. It'll be interesting to see if Disney has any sentiment change. If they come out with weaker than expected streaming numbers, for example, I mean, that's been like a plague for them. It doesn't really matter if the rest of the business is doing great. Investors are seeing one number and kind of jumping the gun on it.
Understood. Yeah, that definitely makes sense. And then one other question for you. Just wanted to gauge your thoughts on sentiment here. We've now kind of sustained this massive pullback. Not in SPY and the Qs. It hasn't been a massive pullback. Obviously, we're not down very far in those, but within a lot of growth and tech and other areas. And we're building out some bases, it seems like, now that we've gotten down to, basically the right before, right after COVID levels. Do you get the feeling that there is going to be more how, I guess as a reporter, how do you think institutions are feeling right now? Or have you gotten any insight into their thoughts on this tumultuous market?
So James Depore, who's a Real Money contributor, tweeted this out this morning, and he meant it for retail traders and investors, but I think it actually kind of speaks to the market as a whole. He basically said that this market feels tired and the people involved in it feel tired, and just basing it off of the action that we've seen so far today, I would agree with that. It feels like we've gone through such volatility, and that's caused such anxiety within investors that people are kind of starting to feel burnt out. And so I'm wondering what kind of catalyst we're going to need to see to kind of really push sentiment in one direction. Like right now, it kind of feels like we're in the middle. We could get a really positive day, and then the next day could be negative again, and we swing back and forth.
Yeah, absolutely. Okay, thank you, Catherine. We'll keep going around. Stock talk. What positions have you taken today? What are you looking at in Power Hour? What's going on?
Hey, yeah. Today, I was just really focused on the DWAC action. I knew there was a ton of volume. So last night we were on Twitter Spaces, completely just happenstance. But Trump's 2020 campaign manager was on there. And he said there was going to be big news for fun this morning. So it took a position right at the start of pre-market. It obviously blew up, so that was nice. CFVI, I was in calls as well as a sympathy because of Rumble Video. They so happen to have that catalyst today with the Joe Rogan offer. I think it's bullshit. I think no shot they get Joe Rogan, but obviously it catalyzed the stock price today. So that was nice, those calls printed. And then I was playing on semiconductor for earnings. I figured with the NVIDIA call flow that we saw at the end of last week that we were going to get a pop in NVIDIA. NVIDIA reports on the 16th next week. So, there's some positive sentiment there. Semis have just been trading well in general over the last few weeks. They've had a lot of relative strength on down days as well. So it was kind of eyeing that, played on semiconductor for earnings this morning, got out of, I got into calls that open, got out of them a little earlier than I would have liked. They ended up running some more, but can't regret profits. So yeah, that's pretty much it. CFVI on and fun today. There were some great Rivian puts that TSDR called. I don't know if he's in here. He called some great Rivian puts this morning that ran really nicely. I was looking to get back into Roblox puts. I was in those last week when the short report dropped. I thought it was a pretty bad short report. I was surprised not to see a bigger reaction, but stock fell like 9% that day on the report, so I got out of those same day. They went up a lot, but was looking to get back in them today. Kind of regretting that I didn't early in the session, but oh well. I still think if that report hits mainstream media, you could see Roblox trade down to the 50s easily. It was a pretty damning report, in my opinion, with regard to their, safety policy and with regard to the way they're monitoring content. That platform is really driven by parents giving their kids money for Robux and all that stuff. So, if there continues to be child pornography and that sort of stuff on the platform, I can't imagine that, a lot of these parents are going to continue to approve. You could see their users and in-game revenue really drop off a cliff. We'll see if that happens in the next earnings report. But I think it's going to take some mainstream media coverage to really scare some of the big money that's in that name, because there's a lot of funds that have gotten into that name over the course of the last few months. We'll see if this scares them out or not. But that's just what I've been looking at today so far. I do like the strength in semis. I want to play them some more. I was looking at NVIDIA calls today. Didn't get those. Another regret because they ran a little bit, but I'm sure we'll get another buying opportunity this week. I don't think this is going to be, a 5 day straight green week or anything. We have CPI data on Thursday. Economic forecast of economists from last week, we're expecting a 7.3% print. I think if we print hotter than last month, then I'm sure you'll see a sell-off. Maybe it's baked in. I don't know. But the price action last week didn't really show a lot of selling pressure. I think some of it was driven by short covering, especially earlier in the week, where you were seeing double-digit moves in a lot of really shitty stocks. I think some of that pressure might have been driven by short covering. But now I'm not seeing the same selling pressure we saw over the last few months, but I mean, there's no saying that this will last. We're going into another CPI print. The Fed has, less and less reason to be dovish with inflation printing hot, and with the labor market participation numbers we saw last week as well, right? Like, I know Sarge was talking about the raw employment data, isn't as promising as the non-farm payrolls are showing, which I agree with. But the market's obviously reacting to the non-farm payrolls. So expanding labor market participation combined with heightening inflation, I think that just reinforces the Fed's position to be hawkish. And, I don't think that's good for bulls. But we'll see. I mean, I didn't expect last week's rally either. I didn't expect us to tie together so many green days last week. So we'll see if this keeps up. But I think there's definitely, this whole week's going to trade around CPI data.
So what do
Stock
you
Talk,
think
did you read me this morning?
Yeah.
No, I didn't. My Monday mornings are a slow start.
Yeah, no, you sounded like maybe I wrote it somewhere else as well. About the raw data, but the thing is, if the adjustments were changed so dramatically for January, that if the same numbers had been done in December, the participation rate would have stayed 61.9%, not 62.2%. So there's nothing nefarious going on, but there was a lot of changes that were solely due to seasonal factors, and the raw number for that's why I don't think the Fed can get more hawkish based on Friday's numbers. This was actually the worst January of the last three of the pandemic era, based on the raw data. The U.S. economy, for those who just trust everything that the media tells you, lost 2.8 million jobs this past January. We didn't gain 467,000 like they said. That's a seasonally adjusted and population adjusted number. The raw data, which is still extrapolated from a survey, so it's not exactly the true number, but it's closer, was a loss of 2.8 million. The last two Januaries, we lost 2.6 and 2.7 million, if you just use the raw data. So we were not a job creating machine in January. We actually lost jobs. We always lose jobs in January. That's why there's a seasonal adjustment. I just wish that we would stop using seasonal adjustments, because they are misleading. They are misleading to people who might be looking to get into get back to work, to get into the labor market, where they think it's hotter than it is. And I think we really should use comparables the way we do with stocks and with earnings, with the macroeconomic data. We should print the honest number and compare it to past Januaries or pandemic era Januaries, because that's more comparable than a January before the pandemic. And so I just think the way we go about doing this, from using surveys instead of data on down to using really sizable adjustments at almost I can't say on a whim, but I mean, you got to do it more often. If you're going to use such a sizable adjustment like once a year, well, do it every 4 months or every 3 months, something like that. It skews the data tremendously, and there are people making important decisions based on this data. So that was my gripe of the day, and I took you way off course here.
No, I agree with you. I mean, I completely agree with you. I know you were commenting on that last week when we got the non-farm print. I think we were on a space at that time, and you were just like, "Hey, it's the raw data is definitely not. That's not what it's saying." And I mean, that's the thing, though, right? I feel like the market reacts to headline numbers anyway, regardless of what the nuances say.
Oh yeah, it's all I'm not going to say it's smoke and mirrors, but it's because I don't think there's anything. I really don't think there's anything nefarious. But I do think that we could make a much truer effort to be more accurate in how we report these almost all these macroeconomic data points. But the jobs number and the wage growth number are so important as to where we go from here in terms of in liquidity and across the economy. I mean, so they made so much of the 5.7% wage growth, right? Well, one, how much good does 5.7% wage growth do you in a 7.3% inflation economy? And two, the average work week dropped from 34.7 hours to 34.5 hours last week. So we, instead of boasting about higher wages, maybe we should point out that, oh, it looks like managers have cut back on hours because wages went higher, which is actually a negative for labor market demand moving forward if it persists more than a month or two. So I don't know. It's just I thought it was a very mixed report. I was not nearly as enthusiastic about that jobs report as most economists.
Can I add
So
one play, by the way?
go for it.
One play I wanted to add for tomorrow's earnings is actually Baba straddles. So if you don't know what a straddle is, it's an options play at the same strike where you get a call and a put. This way you can play earnings to both sides. And I think Baba is actually one that if the market reacts well to it or reacts negatively to it, it has so much volatility and push to the upside or downside that those one of the again, the straddle will end up profitable to a nice degree. The revenue is actually, they're trying to really boost revenue by almost, I think it's 7 billion this earnings, and their free cash flow is increased further. So yeah, just a straddle, Baba, and just look out for those earnings because I think they're very understated how much of a market driver a strong Chinese number to flip that market to kind of push the bullish sentiment of the market more, how big that could be for the market.
Perfect. So I do have a couple questions on some of the plays, but I just want to make sure everyone gets a chance to speak, and then we will go a little bit more into that. We also need some prayers for green candles. Our streak is in danger here. These 5-minute reds are dropping through some key points. So hopefully we're going to bounce off the 100 right here on the 5-minute and come back up. We'll see. Ooh, no. Okay, let's see what happens there. Juicy, and then we will go to exclusive. Juicy, what do you got for Power Hour?
What's going on, man? Started off the day very well. DWAG, Tesla, Bros, quick scalps, all for pretty much big digit gains. But Power Hour, and just for the rest of the market is, where's the money flowing to? I'm looking at a monkey right now. My bad. Where's the money flowing to right now is banks and energy. So I did open up a swing here in CVX, currently up about 60% here. I am long Citibank. Pretty much both calls are for next week. And those are my only two open positions. I want to be like a little tip that I like to tell people. If you're going to swing anything in the choppy market, keep it in the top 3 sectors, which are right now currently XLE, XLF, and XLP, which is consumer staples. So if you're not in any of those 3 sectors to the upside, you want to focus on the 3 to the bottom, which would be tech. I'm not short the rest of them, but you want to be short those 3 in the bottom. Anything in the middle in a choppy market right now, you really don't want to mess with it. SPY continues to stay inside of the day from yesterday. So this is literally a choppy day. And my advice to everybody is watch out for this month, as February is currently inside month from the prior month, which is a giant outside bar. So right now the market is running around with the chicken with its head cut off, doesn't know which way it wants to go. And for me, I want to tread with the money. The big institutions are buying banks, they're buying energy. So I want to be aligned in those sectors for any overnight money. Quick scalps right now are okay for any sector, but if you're going to put big size on anything, make sure it's in those top 3 sectors. But yeah, that's it for me. And big shout outs to Rick and Blake in the crowds, and big shout outs to Exclusive. You're always my man in Stock Talk Weekly. Hope you guys are doing well.
Awesome. Speaking on that note, let's get Exclusive into here. What's going on, man?
One quick point I want to make, Exclusive. I don't mean to interrupt you. One quick point I want to make.
No, you're good.
I know somebody was talking about Baba earlier. One thing I encourage people to do is if you're looking to play a stock in earnings, which I don't typically do, but if you want to play stock for earnings, a lot of times with these super popular names like Baba or like remember Amazon last week, the premiums get super jacked up on these blue chip popular names because so many people aren't playing the earnings, right? And so a creative way to do it, if you want to go long or short for one of these I won't call them all blue chips because some of them aren't by definition blue chips. But when I'm saying that, you get what I'm saying. Names like Baba, Amazon, Apple, these names that everybody knows. When you have that much interest in the options chain, you're going to see inflated premiums. You're going to see inflated IV, and the IV crush post earnings can hurt you on that. So a creative way to do it is find an ETF that has a high weighting of that stock, right? So like for Amazon, you can do XLY because it's a 22% weighting in XLY. If you want to play Baba without getting those massively overpriced premiums, you can look at KWEB, which is the Crane Shares China Internet ETF. Not an amazing ETF, but Baba is, I think, 7% of that ETF, and it tends to trade with Baba. And also, that ETF will also get further dragged down because if Baba does tank on earnings or rips, whichever way you're playing it, it'll drag the rest of that names in the rest of those names in the ETF with it because they tend to, the China names tend to trade in sync. So if you're looking to go short or long Baba, you can do it with a straddle, like how Stocksman said. But keep in mind, the IV's jacked, the premiums are jacked. That straddle could fuck you. So you might want to instead look towards an ETF that has a heavily, weighted position in the stock that you're looking to pay a play. That can often work better. I do that a lot, and it's usually the premiums are cheaper and the IV is not as crazy jacked up. So that's just a point I wanted to make. My bad, exclusive. You can go for it.
No, man, you're good, and I agree. I definitely agree. That's why I got those KWEB swings last week. So definitely, yeah, and these earnings are always. I always tell people, especially people in our group, that if I'm going to get an earning, it's going to be a lotto that's covered with profit, and that's it. I learned my lesson the one time last year I did it on Amazon. I outsized, went full size on Amazon and got screwed. So I will never do that again. But looking into Power Hour, obviously you have some pretty strong sell-offs here. SPY all the way back to the VWAP. Q's is kind of at that pivot here daily. So, it's just kind of one of those lull days. I know I spoke about this for a little bit on Friday, that this week was going to be kind of a back and forth, no real clear direction throughout the day because everyone's sitting waiting for, the financial events this week on the economic calendar. So, I think until Thursday, it's going to be one of those choppy markets without clear direction. And you're seeing that. So, I think more importantly than anything, as far as giving plays and positions and everything, I think it's more important to just preserve capital. So I don't have any specific recommendations as far as plays go. I mean, maybe short DWAC here because it's selling, but other than that, yeah, I'm just going to be reactionary, just kind of waiting for moments because, I've only taken a couple of trades today, so there's no real need to force anything. But
So yeah, I guess a couple of people have discussed that, and that's one that I wanted to throw out there was, so it's been mentioned to short CFEI, DWAC, but then it feels like some people have also, potentially maybe still long on these names.
now we're down $2 more on DWAC.
Okay, so I guess let's have that discussion right here. Stock Doc, if you want to chime in, are you shorting DWAC? Oh, whoa. Did that fall all the way down?
85.10 is a major support if that fails. Hello, 82.
Oh, wow. Did that all just fall in the last 10 minutes?
Yep.
CFVI coming down too? Wow. Oh, wow. You already got that drop, Stocksman, it's already at 15.
Yeah, brother. Yes, I
Is that
did.
$1?
Yeah. It's that one, and then also I closed my mark position, and then picked up a small put as well, very small sized. So looking nice right now. Finally, looking right. Market's pulling back as well. Yeah, I think we settled though around this point, 448. 448.88 is where I think we settle. I don't really think we break too far below that. And I actually think tomorrow we're gonna see us push a bit higher. That's my kind of prediction here.
Exclusive. What do you think about Facebook here?
Facebook. I mean, I don't really want to entertain it until it's either back above 231.50 or back below 223.63.
Okay. Evan,
So,
you want to? Oh yeah.
No, I was saying, the mission on the really short-term play on DWAC went down to 85.10, and now it's just kind of in that period where it can either bounce or drop further. But I'd say 89.52 to the upside, 85.10 to the downside.
Okay. Let's keep an eye on that. Yeah. Okay. Interesting thoughts here on Facebook. Stock market news. Let's get you involved with this. what are you watching? And do you have any stocks that you want to throw out here?
I'll keep it really brief. I see we got Brad up here, and I definitely want to hear what he has to say. Definitely watching for a lot of the stocks coming after the bell, the earnings today. I know we have a busy week of stuff. Not as busy as it has been, but still Disney, Uber. There's a bunch of other big ones in there. I know Pfizer is tomorrow, Peloton's tomorrow, but we got Amgen, Simon Property, Take-Two, and CHGG after hours today. I'm watching for those coming up. Interesting this morning for me to see a lot of my stocks up and Facebook and Square and a few others down there lagging behind. Really, the ones that have been lagging behind continuing to do so, while a bunch of the other stocks did move higher. And as we moved into the day, it's kind of evened out before where we're really at. My portfolio has not changed by much today, so we're about even there, kind of getting the crypto out of it. But yeah, we're kind of back where we started. I'm really watching for these earnings coming up after the bell, and I'm super excited to hear what Brad has to say after me. Just before that, I just want to give a big shout out to all our speakers that we have up here. Thank you all for coming in and making this a great power hour every single week. Big shout out to Wolf for coming up here and helping us host in this space, and big shout out to the Bullish Rippers, the Green Raccoon, for putting on such amazing spaces at least 3 times a week. Make sure you check them out, give them a follow. Follow all of our speakers up here, and I'll throw it back to you, Gov.
Thank you. Yeah, SPY just went red. So that's happening. But hey, maybe we'll play the downside here. And yeah, thank you to everybody that was following, I think, last week on this account. So if anyone's unfamiliar, my name is Gav Blacksburg. I do run the Wolf account, which you can see up here co-hosting. My co-host and I, Stock Market News, run this Bullish account. He does the from it. I do 2 spaces a week. He does a space a week. So if you are liking the content that you either get from the Wolf account or the Stock Market News account, and you're following one of those, you should be following us on this account as well. Again, we're doing multiple spaces, long-term investing, power hour. This week, we even have a space focused on the video game industry that we'll be doing, and then tons of tweets, especially with earnings season. I mean, go look at the last tweet, actually, that put out like an hour ago. It's fascinating. It was the top trending searches of 2021 in every U.S. state that Evan put together there and got that out. So I thought that was amazing. And last week, we got this account to 15K. So we're getting close to 16K. So we'd love to continue to see that following join up with us as we do these every week. And then make sure you are checking out our awesome speakers. Great panel that we bring on these power hours. Very diversified. We have, like reporters like Catherine who are not investing in individual securities. We have guys like Sarge, on Wall Street, like getting into the nitty gritty, taking all different types of positions. We've got long-term people like Brad. A lot of people who are kind of in the middle of that, like Stock Talk, and then we've got exclusive Juicy and Stocksman, very active with the technicals as well. So a very diversified panel up here. Let's go to Brad now to hear from you as to what you are looking at today. Actually, what's up, Exclusive?
I was just gonna go quick. Those puts on DWAC are up pretty nicely, so you can either roll down or just scale out altogether.
Perfect. What's up, Brad?
Hey, how's it going? Should I just get right into it?
Roll into it, man.
All right. So kind of a boring week for me. I guess the eye of the storm, if you want to symbolize it. I have one earnings report this week. It's JFrog. I think it's either Wednesday or Thursday. So not a ton of information crossing the tape for me this week. It really kicks into high gear again next week. And really, I guess just the message I want to talk about quickly is that these quarters are probably the most important quarters and results and results that we've had or that I've had for a lot of my holdings to date. So as public companies, probably the most important quarters they've had. And I say that because we are overcoming or getting through a lot of extremely unique and extremely aggressive exogenous headwinds and tailwinds that really distorted performance for a lot of companies. And it's not clear it's not clear how to quantify that distortion, but it will become a lot more clear when we get 2022 guidance for all of these firms that are about to report. So for me, it's just it's exciting. It's exciting. It's anxiety provoking. I think 50-50 is a good split for those two emotions of companies that are going to report, that are going to kind of prove to me or show me how much of the performance was macro driven, how much of the performance was pandemic driven and unique to that environment, and how much of their performance was unique to their own value proposition and actually sustainable over the several years or at least several quarters to come. So you think about a company like Upstart that had a lot of macroeconomic headwinds and tailwinds that it dealt with during the pandemic that halted its business and then greatly accelerated its business pretty much overnight. So it will be extremely interesting and extremely telling to me what they're kind of expecting for a year that's getting a little bit more back to a normal macro backdrop. And I say normal with hesitancy because we're not there yet, but we are a lot more normal than we were 12 months ago. Maybe some more examples like a Curiosity Stream that's been absolutely shellacked lately in a streaming company that performed admirably during the pandemic. But how much of that is because people are home from school or people are home from work and forced to socially distance, and how much of that served as a tailwind for Curiosity Stream, just like we saw it for Netflix. Now there are some unique features of Curiosity Stream that make it a little bit more durable against this reopening. They're very involved in education and also extremely cheap. So a lot of times people will just forget about their subscription, which is not a great bull case, but definitely a factor for them. So I guess just the overall message is I'm going to learn a lot in the next few weeks about how quality of long-term investments my companies are and how deserving they are of my continued conviction and continued capital. So yeah, excited, anxious, looking forward to all this information crossing the tape. And then this week a little bit boring, but we'll get back to it in a big way next week.
Okay, pretty interesting stuff. Are there any earnings which you're looking forward to this week?
Yes, aside from JFrog, maybe Nvidia. I do own SMH, which is just a thematic semiconductor ETF. So just to see how that sector is really progressing. I own it just super quickly, just because to me semiconductors are one of the most difficult and complicated things to understand, and to actually understand what differentiates one chip and one microprocessor versus another. That's kind of outside of my wheelhouse. But then you look at sector penetration and sector growth for semiconductors, and it's just up and to the right over the last several decades. And with autonomous vehicles and the Internet of Things and autonomous factories, that up and to the right is just going to continue. So just wanted sector exposure there, and not really confident enough to stock pick. But that was not that was not what you asked me. So yeah, I guess we'll be looking at Nvidia just to kind of get a read through on how well the sector continues to perform and hold up.
Perfect. Appreciate the insight there. Evan, do you have any questions for Brad from the more long-term perspective?
I mean, in general, we could talk a little bit, Brad. How are you feeling about the Facebook and PayPal post-earnings moves? Are we waiting a little bit longer to get in? Have we changed anything? Are we even planning on getting in at all? Where's your head at with that?
Yeah, so PayPal, to me, the narrative of the company being incapable of innovating and being a dinosaur is not super accurate. I think the vast majority of this growth slowdown and this underwhelming quarter and guide that we had is due to, and I've talked about this in the past, but due to an operating agreement between their former parent company eBay and PayPal expiring, which really allowed eBay to internalize a managed payment system, which led to volume or total payment volume from eBay as a client just cratering, which really had a large impact on their growth. So focusing on ex eBay numbers and what this business would be looking like without this 4-quarter year-over-year comp headwind, and things are still looking extremely good. They're rapidly rolling out new Venmo products to 83 million users. I mean, that's just a crazy number to fathom. And the new PayPal digital wallet with all kinds of competition has by far the largest merchant share and by far the largest merchant acceptance share out of any other digital wallet. So people are kind of doubting on management a little bit, and that's fair given the last 2 quarters that they've posted, and removing something like they had a 750 million account target guide for the medium term that they removed because they're pivoting to wanting to focus on higher value clients and higher ROI client or customers and higher ROI customers, because we have to realize it's not a SaaS company. So customer growth and revenue growth are not nearly as correlated as it is for maybe a CrowdStrike or for a ServiceNow or whatever you want to call it. So for PayPal, the top 30% of their customers deliver the vast majority of their total payment volume and the fees that they collect. So they're focusing, rather than optimizing and maximizing how many accounts they're adding, which is a really sexy number and makes them look good. They're focusing on the higher value accounts that they can target, because really what they were doing is trying to incentivize dormant accounts that were in the ecosystem via promotions to make another transaction to kind of reintroduce themselves. And what that was doing is well, first it was inviting fraudulent accounts to take advantage of these promotions, and it was also leading to dormant accounts making one more transaction to get the promotion and then just going back to dormancy. So I think the pivot is needed. I think it's warranted, and I think it's a short-term painful pill to swallow. And combining that with the eBay headwind that I talked about is leading a lot of people to write this company off. I don't think that's going to stop anytime soon. I think we have 2 more quarters of this ex-eBay comp headwind finally rolling off. And I think during those 2 quarters, there's going to be a lot more opportunity to build out my new position. So I did add a little bit after earnings, and I added out like 131 or 132. I think it's around 121 or 122 right now. But position's about 2/3 full at this point in time. Haven't paused adding, but really waiting for Mr. Market to kind of give me a great deal. Which you look at PayPal right now doing probably $6 billion in free cash flow next year, so trading in the 20s in terms of free cash flow multiples, and now in terms of forward earnings multiples, and a 20% compounder. So really, really strong company with a phenomenal track record that is dealing with some things right now that it's going to continue to deal with. But I think these headwinds will abate eventually, and when they do, that narrative of PayPal being done will be over. And then for Facebook, the quicker answer is the company's investment case really has changed with their aggressive pivot into all of this spending on the metaverse. So and then combine that with things like the content monetization transition that they're going through with trying to monetize Reels, and then things like IDFA, and they're dealing with a lot of stuff right now. So the advertising business is a little bit more precarious than it has been in the past. I think it's still extremely stable. It's definitely still extremely stable, but on a relative basis, maybe less so. And yeah, that needs to continue to be a phenomenal business for them for the next several years, because metaverse is not all that close in terms of becoming a viable and scalable and profitable business. So I have actually paused adding to Facebook, waiting for a little bit more clarity on how the future growth projects are shaking out. Oculus obviously is going extremely well, but again, tiny piece of the puzzle. So need things like Instagram Shops to really take off. Need things like Reels to monetize at a higher clip. Need more things to go right for Facebook than we've been counting on in the past. So for those reasons, just kind of approaching it with more caution, but also haven't sold a single share. Would love to resume accumulation at a 16 times forward multiple in the near future, but just waiting for some more information and some more context.
Perfect. Evan, anything else you want to ask on that? We got about 10 minutes left, so I think we should roll into perhaps some of the other items here.
That was perfect. I'm down to keep going past the power hour. Do a little bit.
Well,
of
no,
live
I'm down to
earnings
keep
if we
going.
can.
I'm just saying for like talking about actual potential plays, because like some of us may
Gotcha,
play some
gotcha,
trades.
perfect. Definitely down
Some
to
of
keep
us
it
the
cycling.
gens.
Yeah, do the D-gens, get it in there at the last 10 minutes so we can get stuff for overnight. We'll see. I'll let the D-gens get their fun in for the last 10
I want
minutes.
to talk about this Facebook play for a second. Stocksman, we called this out in the beginning. I kind of like it now. It's cheaper than it was beforehand. It's Facebook weekly calls at the 235s. I'm intrigued. 18% cheaper than the beginning of this space. Does anybody have any opinions on the Facebook calls here? Juicy, Sarge, Stock Talk?
Man, I'm hurting in it right now. So I'll be honest with you. I got it in my long-term position, and I'm down on the shares. I'm going to hold. I mean, higher time frames is the issue for me right now with Facebook. I got to let at least this weekly candle close, which is just a mess, right? The weekly and the monthly are going to be just ridiculous, right? So I need a reversal. I need this candle to close on the weekly, get a reversal and a break up before I can even make that decision. So same thing with PayPal. So I was waiting. Everybody's been crushing to me about this too. Should I buy the dip? Should I buy the dip? My answer is because tech's in the gutter. I would wait. I need more confirmation.
My concern with Facebook is that the 61.8% Fibonacci retracement of the March 2020 through September 2021 rally was $231. That's where I really expected some support to show up, and it kind of did show up there for a couple of days, but it's hard to say that level's holding right now. So I did think about maybe grabbing some Meta on the cheap, so to speak. But they do have a damaged business right now, and they do seem like they're trying to figure it out. They're trying to reinvent themselves a little bit with the metaverse, but that Facebook hasn't done that in the past. They've gone about things by they've really bought growth in the past. So this is since the initial invention of Facebook. This is really the first time they've tried to grow a business in house. So I just don't know. I don't know if Facebook is worth the risk right now. I mean, that might sound foolish if it's up $100 in a few months, but that level, that $231 level, I mean, my elderly uncle actually owns a lot of shares, and he called me and said, "What should I do here?" And I actually told him not to sell it. He called me after the collapse, of course, and I probably could have saved him 12 or $13 if I told him to sell it that day, but. Uh, I just don't know. That spot here, if it can regain that spot, I guess on a long-term chart, it would look like it held. But I think I need to. I would rather buy it above 231 on momentum than buy it here.
Okay. Yeah, I actually have the same fib sequence drawn as you do. So I see exactly what you're talking about, and it did fall through that, which is a bit worrisome. Okay, what else do we have play-wise? Just looking, if anybody wants to throw out any other plays that they have in these last 5 minutes, you are welcome to unmute. Evan, did you just unmute?
Yeah, I was gonna comment on Facebook quickly. Like, I still do very much like the stock for the long term, but I was talking about this on Friday of last week that the post earnings drift, especially after really large moves, is a real thing. It doesn't mean it's a certainty, but what tends to happen is for the week, 2 weeks following a huge move like we saw for Facebook earnings, PayPal earnings, you'll see it for the upside happen a lot too. The stocks will continue in the direction that they were going. It's not just like the full move up, we're down 20%. Okay, next we're going to bounce back. And like I said, nothing's 100% rule, but it's just tends to been happening. I do think for the long-term investor, Facebook is probably to the point now where you'll buy and look back in a couple of years and be happy that you did that. But I think the key there is a couple of years. And do we see lower in the next little bit? I just don't see that reason in this week, in that next 2 weeks, why Facebook would trade higher unless the market conditions change significantly. So for me, Facebook is the stock where my long-term investor hat likes it, but that generally tends to happen when the technicals in the short term really isn't there. Type of thing where I'm going to move like a tortoise, a turtle, going to move very slow, buy in very quickly, slowly over time if I am going to DCA into it. But I'm going to give myself at least a week in there from the earnings before I do start to get interested.
Perfect. Okay, I'm also seeing a couple of other areas, stuff moving. NCLH looking real interesting to me right here. A lot of big money is coming in actually on the puts for NCLH, which is Norwegian Cruise Lines. So maybe they know something there, but there was all calls for a while, and a lot of these puts have been coming in more recently. So keeping an eye on that. Sarge, you had unmuted beforehand. Did you have something else?
Well, two things. I was going to point out something that made the market fall, but I see the pup. Danny. He just posted on Twitter, Facebook chart that he sees support in a range between 215 and 200 if this Fibonacci level does remain broken. So I just thought I should point that out, being he's a pretty talented technical trader, and he just posted that on Twitter.
Just got him up here.
Oh, sorry about that.
And the other thing
it got cut off.
Is that the pup? There he is. Okay, take it away.
No. What while I was transitioning to speaker, you got cut off, so I wasn't sure if there was a question there.
No, I didn't know if you were in here, and I was just pointing out that you had posted pretty much an answer to our question. So I knew you were listening, but I didn't know if you were in here as a speaker. So.
Oh no doubt. Yeah, I mean, if you look back to the COVID lows, and then even further back on Facebook, to the January 2019 lows, it deviates from that 200 SMA. It's done it twice on these hefty pullbacks. So I'm actually looking at a move to that spike high on July 23rd of 18, and then that 5-day high in early 2020 in January, and then that big green candle on June 29th, that band of orange, and I don't know if I posted it up above yet. I'll post it right now. That's what I'm looking at for support. I do think we come down to 200
for a bounce. To me, this looks like a wave 3, this gap down. And so we may see possibly a relief bounce back to the 200 and then maybe a push back down to $200. But I agree with you. I'd rather take it back through the 618 at 231 than try and time a bottom down here.
Thank you.
Awesome.
One thing I wanted to point out for the folks who might be listening to us and don't really know what knocked the crap out of the market there, that was an algorithmic response to a press conference at the White House where President Biden and Chancellor Scholz of Germany, they were talking about the Ukrainian-Russian situation, and they were talking about a united military response should Russia go forth. So that was basically heat-seeking algorithms responding to keywords in their press conference that knocked the market down.
Danny, while I have you up here, any thoughts on NCLH? Looking at it going into the close.
Let me take a quick look.
To take a short or puts.
Quickly, a couple of I know the cruise lines, CCL and RCL are the 3 of the top 5 top performing S&P 500 stocks so far today. So it's the cruise lines in general. There's something going on there.
Exactly.
Yes, it looks pretty nasty. I mean, it's possibly good for a short. But we're kind of in the center channel of the flag, kind of to the downside. What I would look for possibly is a retracement back up to the 50 SMA and look to short it there. I think if you're shorting here, it's a little bit of no man's land. I'd rather wait for a like under 1772 or possibly even under 1829. But it's moving up. I mean, maybe a rejection off of $23 possibly could be a good short. But for me, it's a little bit in no man's land right now, so it could go either way.
Okay. Yep. Keep an eye on that. All right. Well, no reason to. It's different in the audience. Do not be scared to not take trades. That is certainly not a problem. Throw it on your watch list. Have an understanding. It is not a loss if you don't place a trade that goes up. It is just learning experience. Okay, we are at 3:59 p.m. EST. We're going to continue running. Evan, what earnings are we getting in the next few minutes?
So nothing too massive, but I guess that's depending on who you are. Let me get back in front of me. I know we have Amgen. I'm going to talk very slowly here so I can get it back. Okay, perfect. Simon Property, Take-Two, Nuance, and then Tenet, Leggett, Chegg is another one that people might care about. Truthfully, not a bunch of huge ones, but we're going to have Amgen, ticker AMGN, Simon Property, ticker SPG, Take-Two, ticker TTWO, and then Chegg, ticker CHGG that I will be watching.
Okay, yeah, I'll definitely be watching Chegg too. Let's see. All right, so feeling out how today went, we're seeing how the rest of this week goes. So right now, we're obviously starting off SPY with a red day on this Monday. I think that's a little worrisome as, again, we are just holding the 200-day. And we did reclaim that pretty nicely, but now we've given up the 20-day. We've given up the year-to-date anchored VWAP. We're now coming down closer to the 200-day. That is on SPY. On the Qs, we also had a red day to start the week. We are still below the 200-day, which we have been for the last 3 sessions. We are coming up on a couple of areas of, I don't know if I would call it support, but just have some fibs that are kind of sitting with the 236 at 351.75. So kind of watching for there as well. But yeah, I don't think we want to see both of them back underneath their 200-day. But let's see how we're feeling moving into the rest of the week. Okay, it looks like Catherine had to drop off. But Stock Talk, based on today's price action, how are you feeling going into the rest of the week?
Sorry, I only got the end of that. Based on what?
Today's price action and where the current, market is sitting with SPY and Qs.
Yeah, I'm hesitant to make any. I'm going to sound like a broken record. I'm hesitant to make any predictions about where the indexes are going to go in the middle of all this. I think we still have a lot more data we need. I think we need to see the CPI print this Thursday. I think we need to see next month's CPI print. I think we need to see what the Fed decides in March. People are really, I feel like, rushing into speculatively predicting where the market's going to go. And I think to a degree it's irresponsible, but it's also just really ignorant of the information that we have available. There are signs that show that inflation is still running hot.
Let's see how the actual prints come in, though. And I mean, there are signs that there's a lack of breadth in the market and a lack of bids. And I think there is. I try to monitor multiple sectors daily. I mean, that's why I built my watch list the way that I did. And, the price action isn't convincing really anywhere. I mean, I think in semis it has been in certain cases. Um, I talked about it, I tweeted about it earlier, but like, all the big runners, the headline runners, what the scanners are showing in the morning, they're all catalyst driven, right? They're all either dropping news or a big ER, right? Like we've seen this with ERs, right? They've been huge catalysts in the last 2 weeks. Same thing with news, and people are jumping on it because I think there's so much money on the sidelines that when people see short-term deployable opportunities, they're chasing them. And that kind of action is not suggestive of a healthy market. I think you need to see, this is maybe people have different opinions on this, but in my opinion, I think you need to see a breadth of continuation in price action to call it a healthy market. And bear markets can be healthy too, right? And so if we're just trading down where you have consistent downtrends in stocks that don't have these super aggressive multi-day double-digit, intraday runners that are, cutting that off, then it's more tradable. And same way if you're going up consistently. But if you're swinging positions in this market, you have to either be on like the highest momentum plays or you have to be chasing the catalyst. So, that's what I've been trying to do. That's why I've been really committing to being up as early as possible. Like, I've been on Discord at like 3 a.m. every morning and just posting things that I'm seeing off the rip because you have to be adaptive. I've said this before as well, but TA in a vacuum and FA in a vacuum don't work in this market. They just don't. No technical analyst could have predicted to you exactly what was going to happen in SPY over the last 2 weeks. Not one. And a lot of them still made predictions. And I'm not knocking technical analysis or fundamental analysis. The reason I just constantly repeat this is like you still consistently see people trying to make predictions about what's going to happen over the next weeks or months based on one of these two methods of analysis that just are you're flying blind. You're not looking at the big picture, which is all monetary policy. That's it. And sentiment around that and geopolitics and sentiment around news. So you're going to have news-based runners, right? And I think they're tradable if you know how to trade them. But a lot of people are getting hurt trading them too because they're buying too high. They don't know how to chart intraday. It's turning people who maybe don't ever day trade into day traders. And so I see the risks there. And, if you're one of those people that's understands what you have to do to adapt to this market, but you're finding yourself doing that and losing trades consistently, take a step back. There's no harm in being in cash. There's no, over trading is almost always a bad thing. So if you feel like you're running into a wall, like take a step back, reanalyze your strategy and then go back in with small size until you're confident again. But if you're just throwing gum at a wall in this market, you're going to get hurt. And if you're holding stuff for too long, if you're getting greedy, you're going to get hurt too. So just try to keep, your eye on sentiment, your ear on sentiment, and then move from there. And if you can do that, I think you can be successful in this market. And if you can really be disciplined with your size and your risk management, if you're hitting big on a few trades because we have so much volatility, right? If you're right a few times, you're going to hit big, especially if you're trading contracts in this market. I mean, right? And so if you manage your risk and your downside and you're getting out of these trades quickly enough with low enough loss, some of these big winners that people are hitting, in this kind of market can make up for that. But, if high beta isn't your thing, then you really shouldn't be trading in this market. If you cannot handle volatility, if you don't have risk management, if you're trading with massive amounts of leverage on either side, if you're trading even on the short side, like I think there's a big misconception on FinTwit, especially that like people who have been net short for the last couple months haven't been destroyed by some of these bounces we've seen. They have. And so if you're not hedged, if you're exposed, I guess what I'm trying to get to is if you're exposed over a period of days or weeks, you have to be hedged. And if you're not exposed over a period of days or week, then you have to be careful. And so either way, whether you're a day trader or a swing trader, you have to really be focused on the monetary policy in this climate, or else I don't think you'll be really prepared for the price action that you're going to see.
Yeah, absolutely. I think it goes back to what you've stated a number of times, which is that this market hasn't picked a direction. And if you come in with size one way or the other, and you don't pay attention to it and heavily monitor it, it's very easy, much easier to lose money than it is to make money right now. Because some people are trying to come in with these few day swings or something like that, but you're just going to get burned, right? And that's why we've continuously preached, getting in, getting out, not getting greedy, right? A 5, 10, 15% profit. It's something people dreamed of having in a day, for a long time, but just never existed. And now, well, didn't exist for retail, and now has become so commonplace that people have just set their expectations way too high, but have not moved their willingness and determination to learn and aggregate information, at the same pace as which they have moved their expectations of returns. So those two things aren't lining up. So you're just getting a lot of people that want the returns without doing the work, which is, I think, kind of what you were getting towards there. In addition to the, this market is tumultuous, it is chop. SPY, I think, I don't know if it had an inside day today. I think can anyone check on that? Did it I think the top of it went outside the range, right?
The index had an inside day.
Okay, so the index had an inside day
And the
too, which
NASDAQ 100 did too.
yep, which is just continuing to show that this market has not picked a direction at all. What does it mean to you, Sarge, when you see an inside day?
It means means volatility is on the decline. It also is a continuation pattern. So if the market's generally moving higher, it probably means when the volatility ebbs that the trend will continue, or if the market's going lower. So right now I feel like the market's going higher. I confirmed for my readers, I think it was last Monday, or maybe it was the Friday before that, that the correction was over, and it was a little safer. Not that I can guarantee anything, but a little safer to start wetting the beak again. And so far, so good on that. This, for me, the fact that they were able to perform an inside day, the sell-off wasn't tremendous on a day when two world leaders were kind of rattling sabers. That's pretty positive. I mean, that to me is the that could have knocked the crap out of the market 2 weeks ago if the U.S. president and the German chancellor are talking tough about NATO making a military stand, in the face of what is perceived as a peer adversary being aggressive. So I think the market handled that press conference very well today.
Perfect. Yeah, I was just looking at some more of the details and quotes that came out of that. So yeah, I mean, at least it didn't happen in the morning. That press conference that might have messed things up a little bit.
Yeah, yeah, and you could have piled into the defense contractors. Yeah.
True, true. Yeah, I mean, I guess we've just all been talking about going short, but I see, and this is another thing where it just goes to Stock Talk's point, which was paying attention to what's going on in the world can be massively beneficial. But I think majority of people probably didn't even know that meeting was happening. They didn't know what they were going to talk about. They didn't pay attention to what was happening. But the people that were looking at that said 3:30. Oh, we're about to dump. I'm gonna either go short SPY, or I'm gonna grab the defense contractors, or things along those lines. So really good stuff, Sarge. All right, stock market news. Is it about time that I change the name of this space to live earnings?
Well, actually, it's going to be earnings already gone. We got pretty much all the numbers already out. We have Nuance, which reported EPS of 8 cents and revenue of 321.4 million. That is the company that Microsoft acquired. So when they're in that process, they tend to give less numbers, maybe don't even have a conference call, that type of things. We have Amgen, which reported EPS of $4.36, beating expectations of $4.12, revenue of 6.8 billion, which missed expectations of 6.88 billion. Chegg reported earnings of EPS of 39 cents, which beat expectations of 31 cents. And the revenue was 207.5 million, which beat expectations of 195.2 million. Simon Property reported EPS of $3.09, which was I actually don't have the expectations there, but revenue was 1.33 billion, which was a beat on 1.24 billion, which was expected. And then Take-Two, TTWO, reported EPS of $1.24, beating expectations of $1.23. And then revenue was 866.12 million, which missed expectations of 879.58 million. I did see they also raised their fiscal year 2022 revenue guidance. Sorry, having a little trouble there. I didn't see what the expectations were, and I can get that for you in a little. I am trying to look into two more news stories that came out. PayPal co-founder Peter Thiel will not stand for re-election to Facebook/Meta's board. So that was one story. And then another thing, I do have to look a little bit more into completely understanding what is happening here. But there's something with Velodyne LiDAR and Amazon with some warrant transaction. If anyone could look into that, I do have to dig into that a little bit more. But that is on my radar as well.
Did you see why Peter Thiel's
Okay,
leaving
awesome.
the board?
Oops,
Did
sorry,
you
I
see
was on
that?
mute. I did not see why he was leaving. Just that he's not staying for re-election.
Peter Thiel to leave Meta board to pursue Trump political agenda. He's back on the Trump train. Oh my goodness. Oh wow. Oh well.
Maybe he was a long DWAC.
Yeah, maybe he's going to
That's
work.
one way to get
Maybe that's where
Palantir
that
above
surge
above
came.
$20 right there. That's a way right there.
Also,
Is that the play?
Hey man,
Kramer's
if you get Trump behind you, your stock I guess jumps up 30% in the day. It's just how it works. Get Trump, get them to start buying, and money flows in. So Palantir to the moon.
Got that.
he's a
got that
longtime
Ken Griffin
Trump
money.
supporter.
Yo, what's going on with Velodyne LiDAR? Have y'all talked about that?
They just
So
mentioned it
something
right
with
now.
Amazon. Yeah, you have to look into
Oh
it,
my
dude.
God, they
I didn't
entered
fully
into a
understand it.
transactional.
Yeah, look into it. There's a deal. I can read it to you fully, but I won't lie. I have to dig into this a little bit more to fully
Oh my God,
understand
the
it.
stock up 90%.
Pursuant to which Velodyne LiDAR
Wait,
agreed
who
to
bought it?
Wait,
issue
what's
to
the stock?
Amazon.com.
What's the stock?
Ticker Velodyne LiDAR. VYLD maybe?
It's a
They said
de-SPAC,
that
right?
How do you spell it?
VELODYNE.
Okay, it's VLDR. And yeah, it's up 86%
Today?
right now. Like
Jeez.
last 5 minutes.
It's up 80% right now.
Now only down
I mean-
70% year to date.
Market cap 740 million. It's true, yeah. Down 69% past year. There you go. Trading at 6.9. Wow. A lot of symbolism here. Okay. Anyone else want to weigh in on that? Stock talk?
It's interesting. I'm trying to look at the details. They're issuing warrants to acquire up to 39.5 million shares. It's just interesting. Yeah, I mean, I don't have a position in this one, obviously, but this is a crazy move. I mean, it looks like it's going to run 100% after hours. It's up 95% now. Pretty crazy. No immediate thoughts. I'm just looking at it. I'm seeing a LIDR move in sympathy, though. It's jumping now.
LIDR. What about Lightspeed? Do they do something similar?
Laser as well as another sympathy.
Yeah, tomorrow it's going to be all the laser plays are all going to just be jumping. So definitely make a little watch list for yourself.
I don't want to
Lightspeed's
make a
more
fool of
restaurant
myself,
commerce.
but if I'm understanding this correctly, so this is Velodyne giving Amazon Investments the option to buy shares of Velodyne through warrants. So that is what I think is happening here.
Amazon car coming soon, baby.
I linked a little blurb at the top from Benzinga kind of explaining, at least trying to explain what's happening. I'm still a little confused. To me, based on that sounding, it just seems like Velodyne trying to get Amazon to invest in them. But maybe there was an agreement. Maybe I'm wrong. I do tend to have a skeptical mind, but also that does tend to help me in finance and investing. At least I think.
The Chegg report looks really good too.
Yeah, students cheating more than usual.
Heck yeah, that's what I used it for in high school.
Shout out Chegg.
I wonder if professors know that when they copy and paste questions from Quizlet, we can just put that in Google and it takes us to the Quizlet. But that's a topic of conversation for another day for sure.
Hey, bro. You're talking too loud, okay? You're saying too much. Relax.
Nah,
Quizlet was one of the best
we're all
things.
done school.
Quizlet was nice. Quizlet was fantastic. I'm 23. I'm out of college 2-3 years now, whatever it is. Pandemic, weird time. Chegg was a nice resource that I used for subclasses, but I could honestly say Quizlet, free resource, was able to find something for pretty much every single class. That was amazing. Chegg was good though. I definitely did use Chegg.
Yeah, and then I guess just sticking with the online education theme, a piece of news for one of my holdings, Duolingo. There's been an institution, what's it called? Durable Capital Partners has just been scooping up shares like crazy over the last few months, and they bought some more today. So pretty minor piece of news, but always encouraging to see people who have access to better information than I do buying shares.
I just want to check the Market Rebels page real quick to see if there's any fake news we can go off of. See, they did tweet about VLDR if we want to just mess with them, but we don't have to. Okay, what else is going on? AMGN, what's that?
Amgen, they just reported earnings too.
Okay. Stock is down post-market. Looks like they fell short on revenue, beat on
Seeing
EPS.
up.
Is it up? Okay.
I'm seeing up 0.66%.
0.66. Okay, got it. TTWO as well. The Chegg one that you mentioned. Is Square down to $100 yet? Wow. LYD.
PayPal.
102.81 right now. But it was below. Was it below 100 at some point? I think it was. Maybe for a split second in there.
Yeah. 102.81. I saw some people saying that they're actually selling Square. I'm like, I don't know about at this point. At this point, if you're still holding, I think this is potentially a buying opportunity, but we'll see.
Gav, I'll quickly jump in. I'm looking at the markets. We're past the 15 minutes after. I have the Finviz stuff. I could tell you some of the best and worst performers from today. Looking at the best performing large cap stocks, some ones that we would know and care about. We have Tyson Foods was the number one, up 12.2%. Royal Caribbean and a couple of the other cruise lines are up here as well. Seeing On Semiconductor, HashiCorp, HCP, Toast, Snowflake, GoodRx, shout out Brad. Coinbase, I know, has been getting a lot of shout outs recently as well, especially with the Bitcoin move. And then towards the bottom of the page, I'm seeing DD Global and Cloudflare there as well. When I flip it over to the worst performers, we got Robinhood right up here near the top, the second worst performer at minus 8.4%. Chewy, Alibaba, Square, or should we say Block, whatever. You know what I mean. Meta's up here as well. Pinduoduo, Rivian, PayPal, Bilibili are some of the worst performers. I'm going to flip over to the large caps quickly. I know a lot of you guys can go just and look at this, but seeing if any do stand out, we have on the first page, the top 20 largest stocks. Facebook was the worst performer, down 5.1%, and it looks like Nvidia was the best performer, up 1.7%. Where I'm seeing about I'd say 60% red to green on the largest stocks. And then quickly looking over to the heat map, you're definitely seeing Google and Facebook standing out in the red. And overall, definitely a mixed day. I honestly have no idea how the index is closed, but based on that heat map, I would say not too far off, but a slight down day. I'm going to go and check that, and I'll give it back to you, Gav. Let's see.
Okay. All right. We're looking into it. Happy 420 if you're on EST time. Let's see what else is going on
You
here.
guys see the warrant exercise price for the Velodyne deal?
I was seeing 0.0001.
That's par. It's $4.18. That's the deal. Amazon gets to buy the shares at $4.18 if they exercise the warrant. If you're wondering why it's trading, what was it trading at, 6 or 7 now? $7.15. 33% of Velodyne's float is held short. So that's who's buying these shares.
And would those shares to Amazon would be new shares, right? So it would expand the float?
I don't know. That's a good question. Should have thought of that. I don't know. It'll take me a while to read all this. I'm not going to give you an answer on the hop.
No, I can't lie to you. This was one that I hadn't seen too many times before, and maybe next time I'll be able to report this right when we get to it. This was one of those where I'm just going to put up a screenshot and let you decide what you think is happening there. So I got no clue.
Also, Zero Hedge just reported that Macron, the French guy, said that Putin agreed to review concrete de-escalation steps, which means Putin told him to fuck off, and he couldn't tell that to the world, which is probably the more accurate to see there. I don't know. Agreed to review concrete steps doesn't really give me a ton of hope. I think that there's still going to be escalation further from where this is happening. Does Peter Thiel stepping down from Facebook hurt the case for Meta?
No.
Not at all. Not in my opinion.
Bro, Meta's case for Meta hurts Meta's case for Meta. That's just it. They hurt the idea of flipping the company name and everything on its own without assault because of a failing eventual business plan that market share is getting taken out year by year. It's probably the highest highest risk, highest reward play, because if the metaverse doesn't work out, Facebook is gonna be like not crushed, but I'll say crushed for the sake of it, just for the emphasis. It's gonna be crushed compared to what it is right now. If this bet doesn't pan out.
Well, the metaverse is going to pan out, but it's going to be run by Microsoft and NVIDIA. Facebook will be involved, but they're not going to run the place.
It's all
Yeah,
about
no, I agree with that as well. I'm saying that's why I'm saying the bet that they've changed their name, they've made their identity as a company about this thing, and if they don't dominate that industry, it's gonna be like, it's gonna make them look just horrible. And I think perception is gonna change about Facebook as a company, and yeah, the bet is not gonna pay out, and people are already very hesitant with their money around this company right now too.
Yeah, they'll have to start calling the company Reels.
Oh, can I make a random, like, this might be kind of random, but like a stock that I'm looking at for a swing for some of the people in here that, maybe aren't options traders, or maybe are looking for something that isn't too affected by overall market sentiment? I could do a quick a flip here. Would be Coty, COTY. I think makeup companies, it's almost like a Coca-Cola. It's almost like something that persistently will make money. Doesn't matter if the economy is going that well or that bad. People, it's an everyday product, everyday use case. Sort of like why a lot of big funds own Alta shares. I think Coty is one. Not only is it a buyout candidate potentially, but pricing wise, earnings are coming up with all clearance coming up tomorrow. They're expected to bring up revenue growth by around 300 million, and they're a profitable company. So I think Coty, if you are looking for a longer term swing, could be one that if you look at the chart, you look at the weekly chart, it's been making higher highs and higher lows persistently on an overall zoomed out basis. And the fundamentals are very, very fair and well priced for this market. And I think even if the market is rate hiked and starts falling, you're not going to see that much of a hurt of Coty's stock, nor bottom line in terms of financials or sales, or things of that nature. So I think the worst for them was during the pandemic when people weren't going out, so makeup sales were obviously down. But as we're slowly expanding out, I don't know if you guys just saw too, Australia's international borders are going to open up pretty soon too. It's kind of a weird connection, but things are opening back up. We're heading more in a direction of still reopening technically, because there's a lot of offices that are closed still, and we got to keep in mind the effects of COVID and the pandemic. So yeah, I think Coty has a very, very phenomenal direction, even as a buyout candidate, as a company itself. And I think one for a lot of long-term investors, if you do believe in companies like Coke and air travel, things that we can't necessarily be without. A woman's makeup is something that she will respectfully tell you that she can't be without, and she runs the household. Women's products always do well. Starbucks, Coty, makeup, stuff like that always does really well. So I think COTY is one to really, really keep on your radar.
Awesome. Okay. I think we're going to move into maybe our final sections in a minute, but before we do that, just want to take another second just to really quick, individually shout out our speakers for people that are on this space. You've heard almost an hour and a half now of content, and I really do appreciate them coming on and sharing it with us. Again, Sarge, classic Wall Street guy, doing a lot of writing as well. If you click into his page, you'll be able to see articles that he's writing. On the more long-term fundamental thesis, you have Brad, who has a ton of written content as well. It's all free, links inside of his bio. On a more technical, as well as a bit of a, momentum perspective, you have Danny and Stock Talk and the Stocksman that you can see here. Both Danny and Stock Talk, have Discords that you can check out for more info on those sides. And then Stock Market News, myself, I am Wolf, as you see up here co-hosting, always doing spaces. This is already like 5 hours more than 5 hours spaces today, I think, like on a Monday, and we have another like 20 planned for the week. So you can check those all out in the pinned post on the Wolf one. But if you're enjoying this, we really are doing our best to build up this Rippers account into an account that's really dedicated towards FinTwit, Evan, Stock Market News, is putting out the tweets. I'm putting out spaces for it twice a week. He's doing a space on it a week. So if you're liking the content you get on the Stock Market News page, if you like the content you get from the Wolf page, do be checking out this Bullish Rippers page. We did a giveaway at 15K. We'll do another little giveaway at 16K. I'm making that decision. Evan, you'll be responsible for the financial side of it. With that being said, let's keep it rolling. Evan, are there any more topics you want to go into, or should we touch on any wrap up, or what do you want to do?
Nah, dude, I just really love that you're comfortable enough to go out and shout out and make giveaways. Definitely something we will do and we're looking to do more of. So excited for that. I think we are good to move up over into wrap ups if we wanted to. I think we got some really good coverage on Power Hour and then moved into some nice earnings coverage there as well. We have a busy day tomorrow, busy rest of the week, maybe not as much as last week, but earnings. Sorry, I was thinking about earnings and we wanted to talk about spaces, but our spaces are not slowing down at all. We have a bunch of those coming this entire week. Make sure you're following all the speakers that we have up here. Gav, Bullish just went through and kind of gave you the use case or bullish case for each one of them, but I do just want to reiterate, make sure you're following every single one of them, and I'll let us get into wrap-ups with that. Big shout out to Bullish Rippers trying some really cool stuff. I just put out a post kind of on the Facebook meta theme that we've been talking about. I pinned it up in the nest above if you want to check that out and show it some love. But yeah, this time I will actually throw it back to you.
Nice. Okay, and then just 30 more seconds before we're going to go into wrap-ups, and that is, if anybody is unfamiliar, we've talked about it plenty, we'll just throw it out there. We are doing a ton of spaces this week. We have over 50 individual unique speakers on these spaces. Massive spread of topics. You have spaces like this. We're doing multiple power hours. We're also just at a crypto space before this. We've got NFT spaces, actually like 3 of them this week. Got real estate spaces that we're going to be on. Really looking forward to hearing from Stock Talk, Stock Market News on those, and some other speakers. If you want to have all of our spaces, simply add it to your calendar. Make life easy. We have a free public Google Calendar. Just DM me right now. DMs are wide open. Shoot me a Gmail, preferably. Does work with other emails, but Gmail's best. And join over 3,000 other investors on our free public Google Calendar, and you will know exactly when all of our spaces are. You can toggle it on and off. It won't clog up your personal calendar. And again, it is free, and you can unsubscribe at any time if you no longer want the calendar. But it is your one-stop shop for finding spaces, finding details on spaces, and for finding the recordings. I will continue to keep the Spaces calendar updated with recordings. It is a one-of-a-kind tool. With that being said, let's roll into some wrap-ups and final thoughts. Sarge, would you like to go first?
Yeah, I don't think today changed anything anybody should be doing. I think I think we can be pretty comfortable that earnings season's going better than expected. The macro, we only have one real macro threat this week. That's the CPI. We only have 2 Fed speakers. I think they've been told to pipe down a little bit because usually in the wake of a Fed meeting, they're all over the place. And last week there was only a couple. This week there's only a couple. So I think being they don't know right now, they're mostly being quiet. So I think if you have a plan, you can proceed. Like I told you at the beginning of this call, I was looking to buy Uber under $38. I paid 37.5 for a little bit right at the close. So, by that little verbal saber rattling by the president and the chancellor actually saved me a little money on Uber. So just execute your plan, stay disciplined, target prices and panic points on everything. Know your setups, know your pivots, and if you don't know why, then just don't do it because cash does not lose nominal value.
Perfect. Thank you, Sarge. Danny?
Yeah, it wasn't really my space, so I won't take up too much time. Just keep following the relative strength. But right now, my eyes are more on crypto than on the market. Bitcoin is coming up to that 618 retracement at 44K 240. So watch Bitcoin over that level. I think over that level, we could test 50K right at that 200 SMA. So obviously, you saw the miners move today. Hut, Mara, Riot. All up more than 6%. Everything that we talked about this morning, Datadog, Expedia, gave all of their earnings, or excuse me, gave all of their gains back today. So that doesn't really give me too much confidence in the market. But right now, I'm really just focused on crypto. Bitcoin, like I said, looking really, really good. Ethereum holding over 3K, right around 3,100. So that's where my eyes are going to be at until the market decides which way it wants to go. But listen, thanks for having me up here regardless, and I'll definitely catch you guys tomorrow on our Tuesday Spaces.
Yeah, we got a couple of those lined up. Thank you, Danny. The Stocksman, any closing thoughts?
Yeah. Closing thoughts, I'm going to agree with the crypto sentiment as well, but I would be a little hesitant that I know a lot of traders right now that are flipping into shorts on Bitcoin and such. So, I'd be careful to go long at this point. Maybe see a little bit more, a moment for a pullback after a pretty long bull push here, almost a 44 from 30, 34, if you really want to say. But closing thoughts are just, don't oversize. If you are getting into day trading and stuff, because we did touch on it earlier, like be very, very certain that that's what you want to do, and it's not as easy as it looks. A lot of people see what day traders do, and even some swing traders do, honestly, with these options and just regular hopping into like DWAC today and stuff like that. People see that and think it's the easiest money, but that's why a lot of people lose their ass in the market. It's because they don't understand that it's not as simple as it looks. And concepts like oversizing, proper risk management, hedging, these are all things that you must know if you want to be successful as a in the 1 or 2% that are successful day trading and things like that. Don't just hop into it gambling your money, because if you do that, then you're just being irresponsible at that point, and you're better off playing blackjack, honestly. So my closing thought is just please learn, educate yourself, and follow the people up here. Thank you for the invite, Wolf and Bullish Rippers. I appreciate you guys, and if you watch COG, Seattle Surge to the Moon.
All right, thank you for being on. Appreciate that. Okay, Brad.
Yeah, not much to add. Enjoy listening to everyone as always. Thank you for having me. Excited to do a lot more of these this week.
Nice, man. Yeah. If anybody's not already checking it out, Brad, what's your next write-up going to be on?
Yeah, so the next few weeks, there's going to be a lot of earnings reviews coming out on every company that I follow. So probably not going to post another deep dive until sometime in March, but it will be on PayPal, and then on deck will be Match Group sometime in April.
Perfect. Thank you, Brad. Looking forward to it. All right.
And then one more thing. Wolf and Evan always say super nice things about all the speakers, and it's greatly appreciated. But they're also awesome, and they're also great follows, and they are also fantastic resources and friends. So go ahead and throw them a follow as well, and then I will pass it over to the next speaker.
Appreciate you, sweetheart. All right, Stock Talk, all you.
I feel like I've given like 10 closing statements today, but I'll just say,
you're going to be given more.
Yeah, no, I know. I just feel like I'm repeating myself for all the people that have been in the last 5 spaces.
But you can do like, you do for like reasons already stated,
Yeah, for reasons already stated. If you don't know what you're doing, go on your favorite stock educational resource, whether that's Investopedia or whatever you want, or YouTube. I don't know. Everybody learns differently, but just educate yourself. There's a lot of uneducated people that are saying a lot of crazy stuff in markets like this. So just educate yourself so you know how to tell the fakes from the people that actually know what they're talking about. And don't listen to anyone blindly, including myself or anybody up here. We're all just people who trade and have different opinions about a bunch of stuff. You got to learn to make the decisions on your own. Like spoon feeding works in a really hot market, and a lot of people spoon fed their way through 2020 on social media, basically riding every play that ripped. But it's not always going to work. And at some point, you have to know how to generate plays on your own. And if you're an investor, you need to know how to generate, investment theses on your own. So whether you're a trader or investor, you have to be educated on monetary policy and technical analysis and fundamental analysis and the markets and how to react to news and how to measure sentiment in sectors. You have to know all these things if you want to do this full time, or if you want to do this not even full time. If you want to do this for the rest of your life, you should know those things, regardless if you're doing it full time or not. So, don't be a bystander with your own money. Don't put your money on the table when, people lose tens of thousands in the stock market and don't blink, but they get charged an extra $3 for delivery and they cancel the order. Like, don't treat your money that you put into the market the same way you would treat your money in any other situation. I think that's a really important psychological thing for people to overcome, because it doesn't feel real when it's digital, but trust me, it's real money.
Yeah, and the faster that you put that value on it, the quicker it's going to grow. Okay, stock market news coming to you for any closing remarks.
Yeah, like you said, we're doing this stuff all day, every single day. It does feel like I do a bunch of these wrap ups as well, but I do want to, we're doing so many spaces. We have so many different people on. It is really important for me that these people are. I want to say coming in and doing us a favor, giving my audience, giving Wolf your audience some really access to some really fantastic content. I'm not going to come out here and say I'm an expert trader or anything like that. I just love being in the opportunity to ask these really, really smart traders and a lot of really good investors up here the right questions to get value to all the people. So I just feel really blessed that I'm able to get in this situation and put out some really great content. So all these people are coming up here for free, sharing this great information. All that I ask, all that we ask is that you check all them out, give them a follow. As they're speaking, check into what they're saying for the future. For now, you can just check into their profiles, click that follow button, see what they're doing. The honest truth of it is, I do say it a bunch, the unfollow button is free, easy to use, and it doesn't let us know. Granted, you're not going to want to unfollow these people, but that option is there. There is no bar to you hitting that follow button and checking out these people who came in, gave us some really, really amazing value for free. So big shout out to all the speakers who did that. Big shout out to all the listeners who came in here and got some value out of it, making it really worth it to do these spaces all the time. And then big shout out to Bullish Rippers for hosting an amazing spaces. I am definitely biased, but I thought there was a lot of value shared here, and we got a bunch more stuff coming. At least 2 more spaces this week. One talking about the video game sector specifically, another one talking about long-term investing, and who knows, we may even throw a third one in there as well. Big shout out to Wolf Financial, who's behind and talking from the Bullish Rippers account, helping me out, helping us out, put on and really make this Bullish Rippers account that much better. King of Spaces, check out Wolf Financial, check out all your speakers up here one more time, and I will quit blabbering and throw it back to you, Gav.
Good stuff. Yep, same thing here. Just want to let everyone know what other spaces we have upcoming. So this was the third one that we did today. The next planned one that I will be hosting is going to be at 7 p.m. EST. So that is going to be in about 2 hours and 20 minutes. And that's going to be an NFT space. Actually, that's going to be on how to build an organic community. I'll be co-hosting that with Asset Dash, a up-and-coming service that is really providing a ton of value to both the stock, crypto, and NFT spaces, as well as a loaded panel. I have coming on Alex Stemp, who has almost 20 million followers on TikTok. Really cool page there. At Legend, the username at Legend, great community builder. Cross and a couple of others. So, and coasting out with Wall Street Memes, of course, and I think Stock Market News might pop in there. That's me at 7, and then at 9:30 p.m. EST, I think I'm going to be hopping on a marketing space. It's actually going to be an influencer marketing space. They asked me to join, speak a little bit about my perspective, and just continue to chat about those things. So that's when we'll be back on Spaces. In the meantime, obviously, we'll all be pumping out content. If you had any questions, feel free to DM them to this account or other accounts. We're excited to be into the thick of things. Happy Monday to all. See you all in about 2.5 hours. I'll put out the reminder tweet for that right after this, and I'll drop the recording for this as well. Take care, everybody. Thank you all who tuned in. And I'm going to leave this space for like 10, 15 seconds because we've now really established there is that like massive lag before it gets people. So at least people can hear me say goodbye.